Can I go ahead?
Yeah, so you can share your screen, sir.
Yes, I'm able to see the screen. I'm able to see the content.
You have to share the PPT also, sir. Do you want others to operate the PPT?
Oh, that is also possible?
That is possible, sir. As you requested, it is possible, sir.
There's a link called slide share. So you'll have to click on that and then click on the window of PPT.
Morning. People have assembled in front of their laptops, iPads and phones to listen to a GST topic. Shows that either they just love the subject or they were just waiting for an excuse to get out of house chores. And this is the easiest to do. Tell the wife that I have a very important seminar to attend. Mr. Vaidishwaran is speaking, I have to listen. And when you say professional work, generally at household, they let you go. Whatever be, it's an interesting plan, and I'm glad that we're able to use technology effectively and keep ourselves enriched with knowledge during these tough times. These are really unprecedented times. Of course, there is nothing called as unprecedented. From a case law perspective, we call it a precedent. Well, Spanish flu was also a precedent, and during Spanish flu days, we had the same kind of orders passed by the government saying you need to stay at home, you cannot come out, and things like that. Theaters were closed and all that. So that being the case.
Sir, sorry to interrupt you, sir. We will first introduce you, sir, before we hand over the proceedings to you.
Oh, okay, sorry.
Okay. Sir, Nilesh, sir, are you able to see the PPT? I have shared it now.
Yeah, it is visible, Mani.
Visible, right? Okay.
Yes.
Okay. Good morning, participants. Welcome to today's webinar on place of supply related to services. We have a distinguished speaker today. It is indeed my pleasure to introduce him, Mr. K. Vaidishwaran. He is a law graduate and he is also a company secretary and graduate CWA. He has enrolled as an advocate in year 1990.
Mani, you are not audible. Just a minute, he's joining back.
Hi.
Hi, sir, how are you?
How are you?
Thank you for sparing your time, sir.
Oh, it's a pleasure. It's always a pleasure. So how many have registered?
Around 36, sir. Over to Maninder.
Sorry, there is some connectivity issue. Are you able to hear now, sir?
Yeah.
Yes. So, Mr. Vaidishwaran has about 30 years of experience in advisory capacity as well as through appearance before various appellate authorities, tribunals, and courts. His key areas of practice includes domestic and international tax laws, excise and customs service tax, VAT, CST, GST, FEMA, RERA, company law, and also IDC. He is considered as a specialist in tax and legal matters with in-depth knowledge of the business and tax laws. He has addressed hundreds of seminars and conferences on law and taxation across the country and abroad. and is the most sought after legal professional in GST and business restructuring matters. He is an expert in real estate contracts and has recently forayed into technology and artificial intelligence. He advises clients across the country on various verticals such as manufacturing sector, retail, healthcare, food, hospitality, gems and jewelry, media and entertainment, information technology, education, charitable institutions, society, clubs, logistics, infrastructure, real estate, shipping and aviation, travel, leisure, banking and financial services. He also advises various associations and chambers of commerce. He has written various books, which includes comprehensive book VAT in India when VAT was introduced in year 2005, and he has recently authored a book called Taxation of Digital Economy, covering international tax and indirect tax aspects, which has recently been released in print and e-version. He is a chairman of the expert committee on GST, Madras Chambers of Commerce and Industry, and also a member of the general committee of Madras Chamber. He is the member of the Finance and Taxation Committee, CIA, Southern Region, and vice president of Revenue Bar Association. He is also a member of SIC, Indo-American Chambers of Commerce. He is the recipient of the Vocational Excellence Award from the Rotary Club of Madras Southwest. He is actively engaged in various social causes, and he is also a music and humor writing are his hobbies. And I have been listening to Sir lectures from more than 5 years, and every time I hear, I always, he has always set a bar, and I can't compare which session is good and which session is not comparatively good. Always he is at the top pinnacle point, and I am sure that the words which I have said now are going to you will all accept with me once this session is completed. With this brief introduction of Sir, I now hand over the proceedings to Sir. Sir, you let me know with the slide change. Accordingly,
Yes.
I will change the slides.
Yes.
Thank you, sir.
Thank you very much, Maninder, and that was a very nice and warm introduction. And dear friends, I know you might have been audible before also, but just to reiterate that it is a tremendous professional commitment that you're able to sit in the morning and decide to spend 2 hours of your time to still learn, even though most of these things are well known, given the fact that we are into 3 years of GST and all of you are in active practice. And the whole idea of this presentation is to just go through the basics again, and then wherever required and wherever relevant, explain the nuances and the tricky issues that are going to flow over a period of time. And given the current atmosphere, when with COVID slashing the entire growth of the country, as well as COVID having an impact on government revenues, it's just a matter of time when things change. And while yes, we will start getting back slowly back to normal, the government will have huge challenges in terms of revenue, and therefore they would take some kind of an action which is much different from what it is now. So let me quickly go straight in the presentation. In the pre-GST era, we are all aware that the goods attracted excise duty as well as VAT and CST when it is interstate, and the services attracted service tax. But despite this kind of clarity in the law, that goods attracted a particular levy and services attracted a particular levy, the dispute in goods and services was significant in many segments. Now, this clarity does not come naturally. This clarity comes through the constitutional entry, whereby each of these levies were governed by specific entries in the constitution. Excise duty is governed by an entry which permitted central government alone to levy excise duty except on alcoholic products. VAT was again confined to state, tax on sale. So there were very clear levies, and service tax was under the residual entry 1897. Now, despite these clear entries in the constitution, disputes arose. And when disputes arose, courts had to establish and clearly say whether it is goods or whether it is service or whether it is both and how to tax it. And became very complex in at least 5 segments to my knowledge: IPR, works contracts, restaurants, software, and lease of equipment, where there was a constant debate as to whether what is being dealt with is goods or what is being dealt with is services. And cases like works contracts even became complex because it was by nature both goods and services. Just go back a bit. So when there were double taxation, when matters went to court, courts started applying certain principles. So there were certain rules for interpretation which they applied. What was known as pith and substance rule. The pith and substance rule was basically to say that if by the pith and substance of the very entry, it should fall under only sale or the state jurisdiction, we will confine it, even though it may encroach onto something else. Then there was the new theory called as aspect theory. The aspect theory was that, okay, we will tax a particular aspect. The goods aspect will be taxed by somebody, the service aspect will be taxed by somebody, or transaction, the sale aspect will be taxed by somebody, the manufacture aspect will be taxed by somebody, the entry aspect will be taxed by somebody, the service aspect will be taxed by somebody. So there was an aspect-based decisions. But internationally, goods and services have always been treated as the same for the purpose of levy of either GST or VAT. VAT includes services as far as most of the other countries are concerned. Next. Going back to the 101st Constitutional Amendment, 246A, Parliament and Legislature has the power to make laws with respect to goods and services tax imposed by the Union or by such state. So, as I said earlier, in the pre-GST era, when we are governed by specific entries and each entry was a subject of taxation by itself, Article 246A created a new format whereby the levy, the source, all flows from Article 246A. So we are no longer bothered by the 7th schedule. We go straight and read Article 246A because it's notwithstanding Article 246, 245. And therefore, it clearly provides that the Parliament and the Legislature have the power to make law with respect to goods and services tax imposed by the Union or by such state. And for the first time, we see that the Constitutional Amendment also defines goods and services tax. So far, I've never seen a definition of an excise duty or a customs duty or an income tax or a sales tax or a VAT in the Constitution. But for the first time, you have a definition of goods and services tax, which means any tax on the supply of goods or services of both, except tax on supply of alcoholic liquor for human consumption. You are very much aware that petroleum products can come into GST if all the states agree before the GST Council. But if you look at the definition of GST itself, it looks as if permanently alcoholic liquor is kept out of the ambit of GST unless and until the Constitution is amended. So with this powers, all the various acts have been enacted, CGST, IGST, State GST, UTGST, which all seek to levy GST on supplies of goods or services of both. Next. Now, where does the problem start? I was telling you that pre-GST, there was so much of conflict, goods versus services, which is goods, which is services. All of us believed that GST would solve the problem. But GST, in my view, has enhanced the problem or magnified the problem. Why? The charging provisions provide for a levy at a rate to be notified. So fundamentally, what happens is, if you go back, some of you who had practiced in Central Excise would know that in the Central Excise Act, there was a levy on manufacture. And the duty was based on the Central Excise Tariff Act, which means there was a statute called the Central Excise Tariff Act, which set out all the goods and specified the rate of duty. If there is any change or reduction or increase or whatever it is, they have to go and amend the Tariff Act. If there is an exemption, they can issue a notification. But in effect, the changes were very frequent. It happened only once in a year. If you take the VAT Act, some of you who are practiced in VAT would know that the VAT Act, Telangana VAT Act, would have had a VAT schedule. All the goods were kept in the VAT schedule. And therefore, if they had to amend the schedule or change the rates of tax, they have to go and amend the Act. The very fact that rate has to be notified indicates that the key power to notify rates has been delegated by the legislation to the government, of course, on the recommendations of the council. So what has happened in GST is that the rates have been frequently amended. All of us know how much of struggle we go through to understand the rate of tax, because 11/2017, as it came in July 17, is not the same now. And you have to keep on updating, look at when it has changed, what has changed. It's quite a big challenge. And it's not easy sometimes in terms of the language that is also used. But what is important is that there is a separate notification for goods and a separate notification for services. So despite GST being a common kind of a levy on goods or services, we are continuing with a different rate of tax system for goods and a different rate of tax system for services by separate notifications. Next. Next. Now coming to the distinction further, the legislation also defines goods and defines services. Goods means every kind of movable property other than money and securities. So only money and securities are kept out of the ambit of goods. Goods would include actionable claims. If you remember, some of you in sales tax law, goods would always exclude actionable claims. But in GST, goods include actionable claims, growing crops and things attached to or forming part of the land, which are agreed to be served before supply. On the other hand, service is defined in even more wider manner. Service means anything other than goods, money, and securities. So what do we read? People assume that services would mean anything other than goods, therefore even immovable property is a service. I don't agree with that. Immovable property is a separate species by itself. Immovable property cannot be brought into the ambit of GST. And that is why even the late Finance Minister, Mrs. Jetli, used to say that we should bring real estate into GST. If we have to bring real estate into GST, that means it is not there. And services means anything other than goods. So it is still a thing other than goods. So we will have interesting interpretation as to what constitutes services going forward. Now, if you look at the services definition, an amendment was made by Finance Act 2018 with effect from 1/2/19 to provide that services would include facilitating or arranging transaction securities. So securities are not subjected to any kind of a tax, but a transaction which involves arranging securities or transactions in securities or facilitating securities, a commission involved, can be taxed. Next. Now, that, as I said, why we are dealing with this kind of topic is that the goods and service distinction are not only elaborated through rates as well as definition, but also statutory provisions. The place of supply provisions for goods is governed by 10 and 11, whereas the place of supply provisions for service is governed by 12 and 13. 12 is applicable where the supplier and the recipient are in India, whereas 13 is applicable if one of them is outside India. So where the location of the supplier or location of recipient is outside India, then 13 comes into play. So in effect, 12 and 13 are the subject matter of our discussions today, since we are discussing place of supply provisions for services. Next. Now, one key word used in both section 12 is and 13 is location of supplier of services. Now, what do they mean by that? They have defined in a very elaborate manner. Assuming, let us say, you are a chartered accountant based in Hyderabad and you are providing services, let us say consultancy, tax consultancy. Now, you got a registration in the state of Telangana, and then from there you are servicing a client sitting in Chennai. So, you are a supplier of services where supply is made from a place of business for which registration has been obtained. Telangana is the location of the supplier. In place of supply becomes the location of such business. Now, assuming you make it slightly complex, you have a registration in Telangana, but you're traveling to Chennai, spending a lot of time in Chennai, and then meeting, you have a lot of discussions there, you spend significant working time there, do a lot of work in Chennai, do a lot of significant activities in Chennai, and you have something like an office there, which is not really registered, but some kind of an office is there, then you're getting into a tricky situation. When supply is made from a place other than the place of business for which registration obtained, a fixed establishment elsewhere, location of such fixed establishment. We will see what is fixed establishment a bit later. Now, in case you provide supply from more than one establishment, that is, you have a place of business as well as you have a fixed establishment, then the location of the establishment most directly concerned with the provision of the supply. So it becomes factual, it becomes technical, it also is well within your control. So you as a supplier of services can easily organize and arrange your business in such a manner if you have clarity on this definition, because you could provide services across the country. So do you want a situation where you should be based in Telangana and provide all the services across the country and the world? Or would you like to have establishments everywhere, and in which case, whether the establishment is directly connected with the client in terms of the services, all those questions comes. Assuming all these places don't exist, then the last residual provision says usual place of residence of the supplier would be the basis. And from a company perspective, your place of incorporation would be treated as the place of residence. Next. A similar mirror definition of location of recipient of services. This also becomes a challenge. So assuming you're a chartered accountant providing tax advisory services from Hyderabad, and the supply is provided to a client, supply is received at a place of business for which registration has been applied. Your client is in Chennai and he has got registration in Chennai, then location of recipient of services, Chennai. Now, the moment supplier location is in one state and recipient location in another state, it becomes an IGST levy. Now, assuming the client has got a business in Hyderabad, or client has got a place of establishment in Hyderabad, does it change the situation? It can change the situation if you are rendering services to the client in Hyderabad. If you continue to render the services to the client in Chennai, and even though that client has got an office in Hyderabad, that office in Hyderabad has got nothing to do with the receipt of services, then you're still okay as far as charging IGST is concerned. But suppose the client in Chennai says, you do some services to Hyderabad, you do some services to Chennai, then you need to clearly decide which is CGST and Telangana GST and which is IGST. So this small definition of location of supplier of services or location of recipient of services can have a huge impact. Now let me go to a little bit a wider situation. I'm talking about chartered accountants because most of these questions are relevant to chartered accountants in their own right. Let us look at clients later. So let us say you're doing audit. And you're a statutory auditor, and this audit involves audit of factory in Chennai, factory in Delhi, factory in Uttar Pradesh, factory in Maharashtra. And your people have traveled all over those places and done all those audits, etc. Done physical verification of stock and then so many things. And assuming you have branches in those locations. If you have branches in those locations and the branch has also got some connection to it, you need to look at your terms of your engagement. You look at who's signing off, which is the partner who's signing off in this transaction. So assuming you say that I will continue to treat it as an audit services provided from Chennai, from Hyderabad to a client in Chennai, in respect of all his plants across the country, you will charge IGST. But to the extent of the branch of your firm, which has done some services in relation to this audit, there may be a requirement for the branch to bill the head office. That's a bigger topic. I'm not getting into that, but there is always a requirement from that perspective. Next. So as I said, I'll come back to the key terms. The word used is fixed establishment. Now let's read this word let's read this definition. Fixed establishment means a place other than the registered place of business. So we are very clear that fixed establishment is not the same as the registered place of business. And it is characterized by one important factor: sufficient degree of permanence, suitable structure in terms of human and technical resources to supply or receive and use services for its own needs. In fact, it's going to be an interesting scenario. If you get a time, if you get a chance, try to get my book on taxation of digital economy, where one of the key topics is how to tax the digital economy and how to examine permanent establishment in a digital environment. What is a virtual PE? Can there be a digital PE? Can there be a significant economic presence which can trigger a direct tax position? How do we deal with artificial intelligence? All those aspects are very much dealt with in the book on taxation of digital economy. It is available in the hard copy format, but that might take some time for delivery because of the lockdown. But it is also available in the e-version. Both Kindle and in Amazon it is available in the e-version. Now, why I refer to the book is that that all these discussions come up there also in the context of income tax. But now, thanks to work from home, this question might come up later for professionals also. Now it says fixed establishment means a place other than the registered place of business, which is characterized by sufficient degree of permanence and suitable structure in terms of human and technical resources. Now, assuming you are working from home and some of your staff or key partners are working from different cities, and they have the technical resources to provide the services online, does it make their residence a fixed establishment? Don't be surprised if you get an absurd show cause notice at a later point of time. But OECD's belief as far as international tax is concerned that it does not create, because the organization does not use that in that sense. It is only a means through which, because of this period, people are doing it, and it does not have a sufficient degree of permanence. So the international principles on what would constitute a P may also mirror on what would constitute an FE, given the fact that work from home would be tested in the future. Place of business is well defined. In fact, in the CGST legislation, you will see this. An usual place of residence in the case of individual is the place where he ordinarily resides. And as I said earlier, for a company, the place where it is incorporated or legally constituted. So sufficient degree of permanence, suitable structure in terms of human and technical resources are the characteristic features of a fixed establishment. Next. Look at this, some of these international decisions. RAL Channel Island versus CB&E commissioners. A UK company had operated 127 amusement arcades in the UK, and then machines were leased out to a Channel Island company in the same group. The group company did not register under UK VAT. The European Court of Justice held that the tribunal was right. The amusement arcades were fixed establishment. Slot gaming machines installed in amusement arcades in the territory of the member state constitutes entertainment or similar activities. Places where the service or supply is places where they are physically carried out. That each law has got their own proxy as to what is the definition of place of supply. But what is critical is that they examine what is a fixed establishment. And the fixed establishment definition used in GST is almost identical to the definition used in Europe. So this is an interesting point where they say amusement arcades can become a fixed establishment. In fact, there could be enough interesting questions. Take a case of a construction contractor. A construction contractor based in Hyderabad has got a project, whereby in terms of the project, he has to go and do this work in Bangalore. He's putting up a huge IT park in Bangalore. Therefore, there is a site, and in that site, this contractor is working. Now, does that site become a fixed establishment, and does that require registration? In my view, yes. But is it the same position for a subcontractor? May not be the case. The subcontract could be located outside the state, and it could be engaged by the Hyderabad contractor to provide services in Bangalore. In such a situation, the subcontractor could be providing services to the contractor and not necessarily to the site. And therefore, we need to examine each situation based on the factual matrix to find out what is the place of supply and what happens to CGST, SGST, or IGST. So, fixed establishment, there is a direct case law in the form of RAL Channel Island. There have been disputes in the context of whether an ATM can qualify as a fixed establishment. Of course, the judgments are yet to come on these things. Next. So let me go into 12. As I said earlier, you have to look at 12. First of all, the first question is you have to see whether it is goods. If it is goods, none of these sections should be relevant. Once you come to the conclusion it is services, then you have to see who are the parties and where their locations are. Only when the location is both in India, then you read 12. Otherwise, you go to 13. So let's look at a few items in 12. Services directly in relation to an immovable property, including services of architects, interior decorators, surveyors, engineers, and other related experts or estate agents, any service of grant of rights to immovable property, carrying out or coordination of construction work. Then the place of supply is a location at which immovable property or boat or vessel is located or intended to be located. Now, directly in relation to immovable property, we'll immediately say that construction is covered. So, construction happens at a particular site. Work is happening at Bangalore. Therefore, place of supply is Bangalore. So, I identify the place of supply. A place of supply identification in one state does not mean location of supplier changes. Location of supplier changes depending upon whether that person has got a fixed establishment in that state. If it does not have, it can still bill from the other state. Now, take the case of lease, commercial lease. As a professional sitting in Hyderabad, you might have invested some money in Andhra Pradesh because you had this peculiar challenge when the states got bifurcated. So before the state bifurcation, people have invested here, people have invested there, and therefore now you have a situation where you could be in Telangana, but your commercial property could be in Andhra Pradesh, and the commercial property could be leased out to a client in Andhra Pradesh. Now the question is whether IGST is applicable or the chartered accountant or the professional or the client should get registration in AP also because he's got a commercial property there. In my view, what do you mean by location of supplier? Location of supplier, again, going back to the definition, is the fixed establishment. When your commercial property located in the state of Andhra Pradesh is given exclusively to a tenant for being used for commercial purposes. It is not your fixed establishment. It is not your place of business. You have no right to enter the place. In fact, if you enter the place, you can be pulled up for trespass unless you have given notice to your tenant that you can enter the space. So when that space is exclusively given to the tenant for his use, and you have no role whatsoever there, no fixed establishment whatsoever there, then your location of supplier is not in Andhra Pradesh. Your location of supplier remains in Telangana. But since a service pertains to a property in Andhra Pradesh, the place of supply is Andhra Pradesh. Therefore, you will be right if you charge GST on this transaction, because supplier is in Telangana, recipient is in, place of supply is in Andhra Pradesh. Now, slightly twisting the facts, assuming you run a corporate office center in Andhra Pradesh, and to run a corporate office center, there are 10 floors which you own, and the ground floor is your operation controls, where you manage the 10 floors. You have 20 people working there. You have security being provided by you, and you virtually run the corporate office center there. Or let us assume you have a kind of a work environment which you control from there. Now, that can create a fixed establishment. If that kind of situation exists, then it will be better for that ground floor to identify itself as a fixed establishment and register for the purpose of GST and charge CGST as GST on the client. Now, let's look at a situation where your client's employees have traveled to Mumbai, and they have stayed in some of the hotels in Mumbai for the purpose of doing work. Now, what happens is that the hotel would charge GST. Now, when the hotel would charge GST, obviously the place of Imul property, as far as they are concerned, place of supply is Imul property is in Mumbai, hotel is in Mumbai. The hotel is also registered in Maharashtra, therefore they will charge CGST and SGST. Now, your client is based in Hyderabad and they don't have any kind of place of business or establishment in Maharashtra, in which case you cannot take the credit of the CGST, SGST. Though it may be theoretically possible to argue that CGST should qualify for credit because CGST is a central levy, whereas SGST is a state levy. But the mechanism or the portal may not allow you to take it, and it's a huge challenge to take the CGST and SGST credit. So people have tried to get over this situation by having some kind of a registration in Maharashtra and then asking the hotel to build the Maharashtra office and things like that. But they're all very simpler solutions which may or may not work at a later point of time. We have to test it whether it is still used in the course of furtherance of business. So lodging accommodation is what we're talking about. Accommodation and Imul property for organizing a marriage, all of them where the place of supply is the location of Imul property. Next. Restaurant catering, very sad that we're all affected big time by the COVID. Whatever I'm talking about here are almost in the verge of serious financial concern because all of them are closed and they don't have significant cash flows. Their money is only based on sales that happen. So location where the services are actually performed. Services in relation to training and performance appraisal. Here they define, are you providing to a client who's registered? If your client is a registered person, the location of such person. No, I'm providing training to all these students. I'm providing coaching activities to students who are not registered. Then where are you performing those services? That will be your place of supply. Admission to a cultural, artistic, sporting, scientific, educational, entertainment event or amusement park. Location where the event is held or where the park or such other places. Okay, this is quite similar to what we already know. Next. Place of supply of services on board a conveyance including vessel, aircraft, train or motor vehicle. Place of supply is the location of the first scheduled point of departure of that conveyance for the journey. Now this is an interesting story. Of course, now all airlines are grounded and all airlines are bleeding and very difficult to know which will survive later. But those of us who have traveled before in Indigo will know that there are two ways of booking food. While you're booking a ticket, you may include the meal as part of it, in which case the ticket price gets inflated in some form and you have some element of GST. The second is, you don't book your meal, but while you're flying, you just order for a sandwich or something, pay money and get that item. Now, an interesting question could be, what is the nature of the transaction that happens? The air hostess gives you a sandwich and you're paying money for the sandwich. At that point of time, the aircraft could be above any state. If it's a Chennai-Delhi flight, it could be in Tamil Nadu, it could be in above Hyderabad, or it could be in Bhopal. We never know. So, do we break our head as to where the sandwich has been sold, or we need an easier solution? So, with that perspective, there's a location of the first scheduled point of departure. Or take the case of a Chennai-Delhi train, Toronto Express or something, where you have the food being loaded at one particular station. So the whole idea of place of supply is to fix something practical. So location of the first scheduled point of departure of that conveyance will be the basis. Of course, there can be a debate as to whether the sandwich sold for a particular consideration is supply of goods or supply of services. Because you have a peculiar problem. You have this ARs which says ice creams at ice cream outlets which are sale of goods. Of course, though AR is questionable. There are debates as to whether a fast food a quick service restaurant which supplies burgers, whether it is sale of goods or sale of services. So many people have gone to the situation by saying that let's have a small room, and if there are 1 or 2 tables, it qualifies as an eating house. If it qualifies as eating house, it's supply of service. If it's supply of service, I'll go to 5%. But there are others who say that, no, we don't have an eating house. We don't have a corporation license for an eating house. We just have a counter. We are just parceling food and people take the parcel food and go, in which case it could become 18% by treating it as supply of service, or should be treated as supply of goods, which again could go to a residual trade. So there are huge challenges in the restaurant food business. And there are also interpretations as to whether it should confine itself to 5% or 18%. You can always interpret that even if it is a restaurant, the notification which says 5% is bundled with conditions. So since there are so many conditions sitting in that particular notification, why not I treat it as a conditional exemption? And if it is a conditional exemption, I can always go back and say, I'm not following the conditions. I'm availing input tax credit. Therefore, I'll go to 18%. You will have an advantage of ITC, but you will also have a customer problem when he sees the bill. Banking and financial services, location of the recipient of services on the records of the supplier of services. So what is your address given to the banking institution will be the basis. Next. Next.
Sir, I think there is some problem, sir. There is some problem there.
Yeah.
Yes, sir. Yes, sir. Continue, sir.
Yeah. Now coming to the most critical provision in section 12, which is default section. It's a very interesting structure in section 12. The residual becomes the most powerful. Services except services specified above provide to registered person. Then the place of supply is the location of such person. Services except services specified above provide to a person other than registered person. Location of the recipient if the address on record exists. So typically, as I said, if you're providing consultancy services or advisory services or audit services or security or general services, you have to look at this section which says the location of such person. So place of supply can be very, very, very different depending upon the scenario. Next. Now we come to 13. Now, as I said earlier, 13 is applicable where one of the party is outside. So let me discuss the most critical element of 13. Services supplied in respect of goods which are required to be made physically available by the recipient of service to the supplier of service or to a person acting on behalf of the supplier of service in order to provide the service. So if you vivisect this provision, I'm a service provider, but for me to provide the service, the goods have to be given to me physically. You give me the goods, I will do the service. Without you giving the goods, I will not be in a position to do the service. That is what is the critical test here. Can I do the service without the client giving me goods? If the client cannot give me goods and I cannot do the service without the client giving the goods, then I don't look at the section at all. So in such a situation, what is the place of supply? Location where the services are actually performed. Then there are two provisos. Now the proviso normally indicates that it is an exception. It is carrying out an exception to a peculiar scenario. Where such services are provided from a remote location by way of electronic means, the place of supply shall be the location where the goods are situated at the time of service. So suppose you are able to do a remote access to goods by electronic means. Obviously, they mean software here. So you're able to access a particular server. You're able to open that particular server. You're given access inside. You're able to reach that software inside, which is housed in that particular server. And then you're able to carry out some kind of repair services. That's what they're talking about. Services provided from a remote location by way of electronic means. Place of supply shall be the location where the goods are situated at the time of supply of service. Then they add another proviso. This clause is not applicable in case of a service supplied in respect of goods that are temporarily imported into India for repairs and are exported after repairs without being put to any use other than that was referred to. There is an amendment here. I'm sorry, I'm missing the amendment. Repairs as well as processing. Both processing is also covered. Just check the amended portion. So the processing is wider than repair. So let's imagine two situations. You are a company situated in India. The foreign person says, I will send my ship. You repair it. And after repairing it, you export it back. But don't use it in India. Now, goods are coming from the client. Without the client providing the ship, you cannot provide the service. And you provide the service and you export it back. You are very much falling within the exception. And therefore, you can claim that the place of performance is happening outside India. You are protected. Similarly, the other situation could be where somebody gives you some kind of material for job work. The goods are to be cut, goods are to be processed, goods are to be shaped. You do all that, but then you have to ship it back after all the activities. Then again, you will have this exclusion. But please remember, customs law is still applicable. Therefore, when the item comes in, it will be an import. And when it is an import, you have to go through customs notification, specifically notification 50/2015. 50/2015 deals with custom duty as well as IGST as may be relevant. Some of the items could be exempted, some of the items could not be exempted. Therefore, goods coming in might attract a custom duty or an exemption or a lower duty subject to some conditions. Next. Next, money. This is one interesting provision. Services supplied by a banking company or a financial institution or a non-banking financial company to account holders. Now, what happens is the bank might provide certain services to its account holders. Now, the place of supply is identified as the location of supplier of services. So, for example, let us say the bank is in Switzerland and providing some services to its account holders. The place of supply is also identified as the supplier of services. Take the case of intermediary services, the most popular one, agents. Typically, I'm just giving an example as agent, but we'll see the definition of intermediary later. As far as agents are concerned, the place of supply is the location of the agent. Hiring of means of transport other than aircrafts and vessels up to a period of 1 month, there also they talk about supplier of service as the location. So these are all mandated provisions. Please understand, there is no negotiation in terms of these things. These are statute. This is not an interpretation. If you fall into this clause, you are bound by the conditions flowing with that clause. If this clause says place of supply is X, place of supply becomes X. You cannot say place of supply is Y. So you have to be very, very careful in identifying which basket you fall in and what is it. Therefore, it is more critical to understand your nature of services. Next. This is the most important residual clause. Other services other than services mentioned above. Place of supply, location of service receiver. Only in the case where this location of service receiver is not available in the ordinary course of business, the place of supply is the location of the service supplier. That is very rare. Most of the cases you will identify who is your service receiver. And not only that, you also have an advantage where the recipient definition is also there in GST, which also indicates recipient is the person who pays you money. So that gives some degree of clarity as to who is the recipient. Next. So now, having given you the basic provisions, having taken you through the specific statutory provisions of section 12 and 13, which deal with services, I will now go on to the next level. So we are now going to 2.0 from 1.0. So in 2.0, we will discuss various elements which are controversial, debatable, some new ideas. We'll have to test how it is working. Take the case of software. Since Hyderabad is a IT capital of the country and significant in terms of information technology businesses, permanent transfer of intellectual property right in respect of IT software attracts GST at the rate of 18% under 1/17 applicable to goods. So they're very clear. If you're transferring the IPR in respect of a software, it is goods, it is 18%. Having been so clear, the next one creates a confusion. Temporary or permanent transfer, or permitting the use or enjoyment of IPR in respect of IT software attract GST at the rate of 18% applicable to services. Now, if they confine this to only permitting the use or enjoyment of IPR, there would have been some kind of conclusion that an outright transfer is a sale of goods or a supply of goods, and a temporary transfer is a supply of service. But unfortunately, they use the word temporary or permanent transfer, or permitting the use of the enjoyment of IPR in respect of IT software attract GST at the rate of 18% applicable to services. Currently, there is no challenge because the rate is the same, but there are interesting issues in terms of place of supply. Why? I'm sure you would have had your lecture already on place of supply of goods by another speaker. And one of the key things that have been talked about was place of supply of goods would be largely governed by delivery, whereas place of supply of services would be largely governed by location of the recipient. Next. So take the case of package software. The software in a box comes via bill of entry, imported. You go to the customs, file a bill of entry and clear the package software. Now this would be perceived as goods. But does it mean that a download of software can be perceived as a service? Whether download of software and usage under license should be considered as supply of goods or supply of services. In fact, this is a controversy which is also there in income tax. Those of you who practice both income tax and excise and indirect taxes would know that forever this dispute arises. I make a payment by way of license fee to Microsoft. When I make a payment of license fee to Microsoft, is it a case of Microsoft having a business income in India? Since they're having a business income in India, there is no permanent establishment in India, and therefore there is no question of this income getting taxed. And since the income is not liable to tax, Section 195 is not applicable because income is not chargeable to tax. Or is it a case where what I'm paying for is for the license to use some rights, and therefore this is nothing but copyright? Whatever I pay is in the nature of royalty. Because it is in the nature of royalty, on account of Section 9, it becomes taxable in India. And because it becomes taxable in India, Section 195 becomes applicable. I have a withholding tax obligation. A second variation could be I'm making a payment to my US company, not for this particular thing. US company has bought the Microsoft software for all the companies in the world, and they are paid to Microsoft directly. They're only recovering a cost relevant to the number of seats or number of licenses that is used in India. So is it a payment towards a software license, or is it a payment by way of cost sharing and therefore not even valid? These are bigger disputes which are all elaborately discussed in my book. Now, coming back to this point, the government of India, the parliament decided to amend Section 9 retrospectively. All of you are aware of those of you in international tax would know that an explanation was added to Section 9(1) Clause 6, specifically to cover all kinds of these royalties. Whether that is superior or not is another question. My larger question would be, can the medium of delivery alter the nature of transaction? Next. Let's look at some judgments. Supreme Court in the case of Associated Cement made very interesting observations and said that any medium, whether in the form of books or CD or cassettes, which contain information technology, should be goods. And they added a further line by saying, the moment information or advice is put in a media, whether paper or diskette or anything, then it becomes chattel. Chattel means goods. Now, this was in the context of engineering drawings, which are put in a floppy, and whether the floppy was goods or not was a question for the purpose of custom duty. What happened was the company paid a huge sum towards engineering drawings and brought the drawings in a floppy and valued the floppy for $1. And that is how the dispute ran before customs and became a big issue. Then following the associated cement case, the Supreme Court Constitutional Bench, in the case of TCS versus State of Andhra Pradesh, held that what are the attributes of goods and whether software has got the attributes of goods. They said that software is capable of abstraction, consumption, use, transmission, transfer, delivery, storage, and possession. Therefore, it has all the characteristics of goods for the purpose of levy of sales tax. Next. Any judgment sometimes will have a concurring judgment, which will throw much more light to the main judgment. Sometimes you'll have a dissenting judge para of the judgment, which also may have a throw an interesting light. So Justice S.B. Sinha, in his concurring judgment para 71, observed that a software may be intellectual property, but such IP contained in a medium is bought or sold. It is an article of value. It is sold in various forms like floppy disk, CD, etc., etc., etc. Each one of the mediums in which IP is contained is a marketable commodity. They are visible to senses. They may be a medium through which the IP is transferred, but for the purpose of dealing the question as regarding levy of tax, it may not make a difference. What is essential for an article to become goods is its marketability, a completely new twist to the whole story. Now, even in income tax, you're aware that there is a dispute as to whether this is a copyrighted article which I'm paying for, copyrighted goods that I paid for, or I'm paying for the copyright. Next. It is not as if India alone has broken their head over these kind of disputes. The European Court of Justice, in a very interesting case called as USoft GmbH versus Oracle, in 2012, gave a judgment which said, downloading a copy of a computer program and the conclusion of a user license agreement for that copy is a composite or an indivisible whole. I'm using the word composite supply for a GST understanding. Indivisible whole, that's the language used. Downloading of a copy of a computer program is pointless if the copy cannot be used by the possessor. The two operations must therefore be examined as a whole for the purpose of legal classification. Where the customer of Oracle downloads a copy of the program and concludes the license agreement and receives the right to use that copy for an unlimited period on a payment of fee, there is a transfer of right of ownership in the copy of the computer program. This is what everybody is talking about, copyrighted article in Indian terms. Next. As I told you earlier, whenever goods land in the country, the customs comes into the picture. Therefore, if it is import of goods, you have to pay customs duty. So a question came before Atul Kaushik as to whether customs duty is involved in a case of electronic download of a software from a server abroad. So what did the tribunal say? They said, yes, it amounts to import of goods. They agreed. And then they said, but how do we levy duty? The software could be imported into any server located anywhere in the country. It doesn't come through a customs channel. It doesn't come through a customs port or a customs airport. It doesn't come through any identified customs entry points. It comes from somewhere in the cloud. It comes and lands in your system. Therefore, there is no mechanism that exists for levy of duty on a download of software. We are aware from the income tax principles, Srinivasa Sethi principles, based Srinivasa City, the computation mechanism is critical for the chargeability. If computation mechanism fails, the chargeability also fails. Therefore, this judgment was applied, and the tribunal said, currently Customs Act provides for a levy of duty only on tangible goods. There is no way they can track this kind of a transaction, and therefore they said electronically downloaded software is not liable to customs duty. And the civil appeal of the revenue against this decision has been dismissed by the Supreme Court. Next. Now I put this interesting question. If download of software is considered as import of goods, there is no mechanism for levy of customs duty, as I explained earlier. Now go back to IGST. Section 5 of the IGST Act provides for a levy of IGST on a supply on a transaction, which is interstate supply of goods or services. But for imported goods, the IGST says there is a proviso to Section 5 saying that IGST on import of goods is levied at the point of time when customs duty is levied under Section 12. That means at the point of time when customs duty is levied under Section 12, IGST is also levied through the Customs Tariff Act. Now, if IGST on import or download of a software is not possible, then Section 12 does not apply. If Section 12 does not apply, there cannot be any levy of IGST on download of software. On the contrary, if you say, no, I will treat download of software as a service, then what is acquired is only a right to use a copyrighted article. If it is a service, it is an import of service. Import of service will attract IGST under reverse charge mechanism. You will have to pay IGST. Of course, this copyrighted article principle which you use here may not be applicable to your income tax provision in the context of explanation. Of course, there also we'll have to see an interesting point. If you read the Andhra Pradesh High Court judgment of Justice Raghuram Gowda in the case of Sanofi Pasteur, it's a fantastic decision in income tax. In Sanofi Pasteur, the AP High Court would have gone deeper into the question as to, in case an amendment is made in the domestic statute, in the absence of an overriding provision of the DTAA, the DTA would still prevail, and therefore Section 90 would still apply. So even after the retrospective amendment to explanation to Section 9, it may be still possible to look at Sanofi Pasteur to say that there is no amendment to override the DTAA provisions, and therefore DTA would still prevail as far as this transaction is concerned. Next. Moving on further to export. Section 16 deals with export, where it says export of goods or services of both is considered as a zero-rated supply. We have a complex system. You're supposed to pay the IGST on exports and claim refund. Or alternatively, you can export without payment of IGST and seek refund of the input tax. Next. Export of services is defined. Let's look at each of these items. Supplier of service must be located in India. Recipient of services located outside India. Place of supply of services outside India. Therefore, your Section 13 comes into play. Only with the help of 13, you can determine whether the place of supply of services outside India, and therefore it is important that you know every aspect of 13 and understand the nature of service, and then peg whether the place of supply of services outside India or inside India. Then comes the additional condition: money must be received in convertible foreign exchange or INR wherever by RBI. And the last tag saying supplier of service and recipient of service are not merely establishments; they cannot be just branches or establishments. Next. So let's look at case 31. Chennai-based company provides IT consultancy services to UK client, which are meant for customers of the UK company who are all over the world, including India. So the whole idea of this first factual matrix or factual point is to examine and find out who is the recipient or where is the recipient located. So generally there is a feeling, even among professionals, that we'll have to look at where the servers are used. Not necessary. Please understand that the Chennai-based company provides IT consultancy to a UK client. Period. How the UK client uses it, whether the UK client destroys these services or whether the UK client consumes the services exclusively in UK or UK client is using for the clients exclusively in India, all that is next stage which is not relevant to me. I have provided services to my client. How the client uses it is not my prerogative. So location of supplier is Chennai, location of recipient is UK, therefore India as well as UK. Money is received, convertible foreign exchange. Location of recipient has been, place of supply has been identified as outside India, and therefore this should be export. And again, who is the recipient? Please go back to the definition in CTC Act. Recipient is the person who pays the consideration. So I get paid by my UK client. He is my recipient. Next. Situation 2. Software consultancy services contract between US branch of an Indian company and US client. Entire work is outsourced to head office Mumbai. Mumbai office provides the software consultancy services to the US branch. Invoice is raised on the US branch by the Mumbai office. Subsequently, invoice is raised by the US branch of the overseas client. Money received by Mumbai office from US office. This is export of service. Now, if you go back to the definition, just without going to the slide, the definition talked about by saying the export of service will not cover one establishment providing service to another establishment. So people would immediately perceive that this is a branch and therefore it's an establishment and therefore it will be hit by the definition of export of service. It would not qualify as an export of service. Government also understood the peculiarity of the problem and therefore they gave an exemption notification saying that if services are provided from one establishment to another establishment, it will be an exempted service. Now please understand, exempt service is not the same as export of service. The export of service got the added advantage of ITC refund being possible and ITC being available for usage. An exempt service would be hit by the other provisions where I may have to proportionately lose the input tax credit. Next. Next. So, is this provision correct to say that establishment to establishment is not an export? Now, going back to 1961, there is the decision of the 5-member bench of the Supreme Court in the case of Cochin Coal, where the Supreme Court explained the concept of export by using one interesting line. They said that export means there must be in existence two termini. That means something must flow from one place in India to another place outside India. They didn't look at the nature of what it should flow. They never said it must be a holding company or a subsidiary company. They never said it must be two entities. They never said it must not be branches. It said postulates the existence of two termini in goods which intended to move or they are intended to be transported. Next. In service tax, the Delhi bench of the tribunal in the case of Microsoft again used the same language and said there should be two termini for export of service. Service generated in one termini, if it travels outside the termini for ending thereat, export can be said to have been made. That is what is required, not whether it is an establishment or whether it's head office and branch. And there's an interesting irony. On one side, you look at the GST Act. They say that in terms of the first schedule, supply of services or supply of goods between distinct persons will be treated as subject to GST. So on one side, you want GST on a transaction of service between two establishments. On the other side, you do not want to treat such a service as an export of service. So it smacks of some kind of discrimination. Next. Now we'll come to the most famous element of Section 13, intermediary. Intermediary means a broker, an agent, or any other person by whatever name called, who arranges or facilitates a supply of goods or service of both securities in two or more persons, but does not include a person who supplies such goods or services. So what are we talking about? We're talking about somebody in between, somebody who facilitates, somebody who arranges, because of whom this supply takes place, and for that he is being remunerated. It should never cover principal to principal transaction. Next. So let me give you 4 case studies on this. ABC and Port Chennai operates as an intermediary. ABC facilitates supply of goods between XYZ Singapore and LKM Turkey. 5% commission is received in convertible foreign exchange from the Singapore company. Now, as per our place of supply provisions, as far as intermediary is concerned, Section 13(8) would apply, and 13(8) would say location of supplier. So, location of supplier is India. Location of recipient is outside India, but unfortunately, place of supply is also India because of 13(8). So, when supplier is also India and place of supply is also India, then you have no choice but to accept that it will not get any kind of protection. It will be subject to GST. It will not qualify as an export of service since place of supply is in India. GST would be 18%. Then the larger question would be with GST. There are 2 views here. One view is that since the transaction is between a foreign company and an Indian company, it has to be an IGST. The other view is that IGST has no application because your location of supplier is in Telangana. The place of supply should also be deemed to be Telangana and not any other state because the place of supply is also the location of supplier. Therefore, it is Telangana to Telangana and therefore CGST and SGST. There can be controversies. I'm not able to take a view as to which would be right because the definitions are not adequately worded. One probable argument would be to see whether how IGST deals with IGST itself. The IGST Act deals with IGST itself. So what IGST talks about is that the IGST is taken as credit by the recipient, and in case he is not able to take the credit, then that money is lost as far as that state is concerned, goes into a pool for distribution to all states, including that state. So in a situation like this, all other states may also get the benefit of the IGST in terms of the payment settlement mechanism from Government of India and other states. But that's a completely irrelevant question as far as the supplier and recipients are concerned. Suffice to say that GST is applicable. With GST can still be a controversy, and things will develop as we discuss further. Next. Company based in Kochi wants to expand the GCC market. Therefore, it appoints an agent in Dubai and say, please provide me leads and identify potential buyers. After the buyer is identified, the contract is executed between the supplier in India and the buyer in UAE directly. After the sale proceeds are generated and realized, 6% is paid as commission to the agent. Now comes the interesting part. Agent is located in Dubai. Therefore, as per section 13(8), the place of supply is outside India. So now the question is it taxable? I'm making a foreign payment to an agent. Generally, people assume that all foreign payment is import of service and therefore taxable. No. Foreign payments are not taxable unless it is an import of service. Import of service requires three conditions. Supplier must be located outside India. Recipient is located in India. Place of supply of services in India. Now, supplier is the agent in Dubai. Recipient is in India. But place of supply is Dubai, not India, because intermediary is located in Dubai. Therefore, it is not an import of service. That means when I make a foreign payment, it is not an import of service, and I'm not liable to pay IGST on this transaction. So look at the funny part. An agent in India receiving money in foreign exchange is taxed. When you make a payment of foreign exchange to another agent outside India, it is not taxed. It should be the opposite, but unfortunately that is how GST is structured. Next. Next. Next slide, Mani. An interesting question can be, what is the distinction between intermediary and support services? Because what happens is that now I'll talk as a lawyer in this case. Of course, I'm still a lawyer talking another matter, but I'm talking about in my capacity as with my experience as in general law as well as tax, not necessarily tax law. Contracts are the most critical thing in any tax positions. Unfortunately, contracts are negotiated and signed by some other department, and then it comes to finance. In any organization, it is important for the finance guys also to be involved in some kind of contract drafting, because contracts will determine the factual and legal position, and you will not be able to budge out of those contracts. I've seen many contracts where they would have covered all kinds of services in the sky, but they will not be providing those services, and they will get into trouble because of those agreements. So let us say your contract is not in the nature of agency. Let us say your contract says you will provide business support service to the foreign company. You will also provide market coordination support. You are not entitled to represent the foreign company. You don't have a right to execute the contract. Then we are back to the debate of 13.2 versus 13.8. If you are able to establish that you are not an intermediary, if you are able to establish that the nature of work done is on a cost plus model and do not involve representation work or agency related work, and substance over form is well established, then you will be in a position to say that my service is the residual service, business support service, 13.2. Location of client is outside India and therefore export. But on the contrary, if your agreement as well as your nature of activities is such that you are an agent and you're being remunerated on a flat commission basis as a percentage, then you may fall under 13.8, in which case, as an intermediary, you are in India and you could be taxed. Next. Similarly, there could be intermediary versus consultants. There could be a contract where you will be required to provide due diligence. You may have to identify strategic investment. You have to do a diligence of the company to ensure that it is pakka for being acquired. You then bring in investors who acquire this company or acquire a significant stage. Till then, you may be paid a retainer fee, and then you will provide a variety of service along with that, including coordination with other professional agencies. And then you may qualify as you will be also entitled to success fee based on the investment that comes. Now, you are not an agent. You are providing actually critical, valuable services, professional services. So your drafting of your contract will have to reflect all these things to ensure that you fall under 13.2 and not 13.8. Next. One interesting decision in the context of business support. Company provided customer care services to customers of CDMA phones on behalf of Samsung Korea. So Indian company providing customer care services on behalf of a foreign company, Samsung Korea. It also identified new customers and explained the features of new products. Delhi says that in the case of Samsung, held that services have been provided to clients outside India. The performance was only on behalf of the client located outside India and hence export of service. Brilliant decision to indicate that who are you providing services to. Even though you may provide services as a customer of your customer, you are doing so at the instruction of your primary customer. Therefore, Samsung Korea is your client, and at the instance of Samsung Korea providing all these things. Samsung Korea is a recipient located outside India, and it should qualify as export of services. Next. So, interplay of 12 and 13. Different plays of supply provisions, different plays of supply provisions of goods and services. Goods and services. This is a summary of what we discussed now. Now, let me take it to version 3.0. Next. Let's complicate this further. Let's bring some income tax decisions. Formula 1 Supreme Court. Many are aware of this Formula 1 judgment. It's one of the landmark judgments which completely changed the concept of PE in a very big way. We don't know how the facts were structured, but the facts went against the company. So typically, this is like those, if some of you had seen the Ford versus Ferrari, this is this famous world championship, where an international circuit is a fixed place where economic activity conducting Formula 1 championship was carried out. And what the Supreme Court said was, there was an exclusive place made available for running this entire show. This entire area was demarcated and clearly available with that entity during the course of the show. And therefore, it is a virtual projection of the foreign enterprise into the soil of this country. It was completely at the disposal of FOWC through which it conducted business. Taxable event has taken place in India, and the non-resident FOWC is liable to pay tax in the income it has earned on the soil. So that place which was made available to FOWC was identified as a permanent establishment by the Supreme Court in the case of Formula 1 World Championship. Next. So my question is, can a permanent establishment under Income Tax Act be considered as a fixed establishment for the purpose of GST? So fixed establishment requires sufficient degree of permanence, suitable structure in terms of human and technical resources to supply services. So in the Formula 1 case, factually, JP had entered into a race promotion agreement with FOWC, whereby FOWC was granted JP the right to host this event for a consideration of $40 million. So there was a payment by JP India to a foreign company. Similarly, under an artwork license agreement, the foreign company allowed JP to use certain IPR for a consideration of USD 1 million. Now the question, if I bring this case law, is should the Indian company JP pay IGST on import of services under reverse charge mechanism by saying that, look, I have contracted with a UK company. I have made payment to a UK company. I will pay IGST on import of services. Or because of the fact that the UK company now has an establishment in India, thanks to the judgment, should that establishment charge GST on India after obtaining registration? In other words, should PE obtain registration in GST as an FE? This becomes the most tricky question that is going to be debated in the future. Now, unlike in income tax, what happens is that even if a PE is created in India, it is only the profits that is attributable to that permanent establishment in India that gets taxed. It's a profit-based taxes. Whereas in GST, it is the entire consideration that gets taxed. And the entire consideration does not belong to the PE. It is not even paid to the PE. It is paid to the foreign company. So there can be interesting decisions that flow in the future as to what happens with PE versus FE. There is not much of clarity in OECD on PE versus FE, except to say that a PE will not become an FE for VAT purposes. But that is not enough, because some of the judgments in India are much more wider than this. Next. A Japan-based company engaged in the business of manufacture of consumer products opens a license office in India. The activities of the license office were all preparatory in nature. License office was not authorized to discuss the terms of the contract or initiate contract. It is only open to act as a communication channel. That is also your RBI guidance. The FMI also stipulates as to what a license office can do, what a branch office can do. Next. Delhi bench in the case of Kawasaki held that the powers in the QA are specific. Employees of the SSC and the license office are not authorized to do core business activity or sign contracts. All purchase orders were directly by Indian customers' head office. SSC does not have a PE in India. Now, of course, the whole thing can change because of MLI. There are some changes which are brought about by MLI which can have an impact on all this agency PE. Next. Now, let's look at this. Employees are present in India. Office infrastructure is available. What prevents the tax authority from saying that it's a fixed establishment? Then you may have to argue that no, it may be a fixed establishment. I'm not allowed to carry on business because even under the RBI mandate, I cannot do business in India. I can only facilitate certain things. Next. Take commissioning and installation. CIE India deputes its employees to commission an equipment in Turkey. Service is performed outside India on equipment that is made available by the recipient. So look at the facts. Indian company sends its employees to commission an equipment in Turkey. Now, 13.3 says, place of supply shall be the location where the services are actually performed, where goods are made physically available by the recipient. Unless and until the client in Turkey hands over the equipment, my people cannot provide the services. Supplier or his agent cannot provide the services. Therefore, since the equipment is being handed over by the Turkish company in Turkey for me to perform the services, the performance happens outside India. And since performance happens outside India, place of supply is outside India. Therefore, it is export of service, subject to the condition that I must receive the money in convertible foreign exchange. Next. Indian company purchases equipment from a supplier in Germany. German company, which is a supplier, has a subsidiary. And the German company tells the Indian subsidiary, look, I will supply to all the customers. You go and install the equipment. The Indian company says, okay, I will install, but who will pay me? The foreign company says, you go and install, I will pay you, raise invoice on me. So, Indian company raises invoices for commissioning installation services from the German supplier. So typically you will have two legs of the transaction. The first leg of the transaction is that the equipment is supplied by German company to an Indian customer. That includes supply, commissioning, installation. Then the German supplier tells that customer saying, my guys would come and install. You don't have to pay them. So the Indian company then goes to the site of the customer and does the installation. And for this installation, they raise an invoice on the foreign. Now, it is an installation, therefore it is a service on the goods, and the goods are made available. So even though you receive the money in euros, it may not be export of services. It could be qualifying as place of performance in India, and therefore place of supply is in India. Next. Another interpretation could be here. We'll have to look at it differently. Who is the supplier of installation services? Indian company. Who is the recipient of the installation services? German company. Recipient of service as per CGST Act is person liable to pay contribution. So is it possible to then argue that my primary contract is to provide installation services, and these installation services are provided in India, does not mean that the goods are made available by the foreign company to fall under 13.3. It's a very, very tricky interpretation. It may not hold water. They may go by the underlying nature of the transaction in this case, because performance becomes critical for the entire consideration to be received. Next. Software. US company provides testing services on software developed by an Indian company. Software is hosted in the server of the US company. Testing carried out in US. Payment received in foreign exchange. Now here again, testing as an activity is carried out on a software, and the software is located outside India. When access is given by electronic means, the goods are still located in US. Therefore, even by the proviso to section 13.3a, the goods are located outside India at the time of performance, and therefore place of supply is outside India. If place of supply is outside India, then it becomes tricky, because place of supply must be in India for it to be an import of service. So this may also not be an import of service. Next. Indian company is awarded a software testing contract by a UK customer. Team from India traveled to London and are given access to systems in UK where the software is located. Money is received in convertible foreign exchange. Here again, since the goods are located in UK at the time when the services are provided, the place of supply of service is in UK. If the place of supply is in UK, then it is possible for the transaction to be an export of services, because the place of performance also happens to be UK. Now, assuming the transaction is structured differently, whereby Indian company is given a contract saying that you supply people, I will use them for testing, I will use them for maintenance, I will use them for any operation, I will use them for simply sitting on the bench. You supply people, your people cost I will provide. Now, that could make it a manpower supply. If it becomes a manpower supply, then it can be section 13.2 and not 13.3 as a default provision. Next. Jolf is a CA firm based in Kerala. US client has sought the advice with reference to setting up two businesses. The US client says, I want two plants in India. I want a cola water project in Kerala, and I want a chemical project in Madhya Pradesh. Jolf carries out research, sits at home, studies all the study in all the states, and then sends a report by email. The email is very simple. Don't put a chemical plant in Madhya Pradesh, there will be a controversy. Put a chemical plant in Kerala. And don't put a water plant in Kerala, there will be a controversy. Put the water plant in Madhya Pradesh. So now, US client has received the services from CA firm. Whether the US client uses this advice or not is irrelevant to us. Supplier of services a chartered accountant's firm. Recipient of services US. The subsequent act as to whether the advice is acted upon and investment is made is not my crime. It's not my mandate. I provide the service. Therefore, place of supply is the location of the recipient, which is US, and therefore export of service. Next. Suresh is based out of Hyderabad. He files returns for his NRI clients based out of UAE. Bills are raised in US dollars. Same logic. Place of supply is outside India. Location of recipient is the basis for place of supply. This again is pertaining to export of services. Next. Now comes an interesting thing called OIDAR, because this whole point of place of supply of service will be not complete if I don't touch OIDAR. OIDAR is an attempt to tax digital economy. In some ways, it is a taxation of digital economy. What they're trying to say is, what is an OIDR? Delivery is mediated by technology over the net or electronic network. And the nature of service renders their supply essentially automated, involving minimum human intervention, and impossible to ensure in the absence of information technology, and includes very wide definition. For example, they talk about advertising on the internet, cloud services, e-books, movies, music, software, tangibles to the net, all your Netflix, data or information retrieval otherwise to any person, electronic form through a network, online supply of digital content, movies, TV shows, music, and the like, data storage, digital data storage, and online gaming. So all these are identified as online information database access and service. In fact, some of the countries in other parts of the world have captured almost the same list or something more or something less depending on the country as digital services. And they've tried to impose what is called as a digital service tax, because they're not able to tax these companies. These companies are located outside India. They're not paying income tax in India. In fact, in Finance Act 2020, there is a new second version of equalization levy, which goes beyond the first version of equalization levy. So there is again an attempt to tax using all these digital transactions. Next. So there is a special section called section 1312. 1312 says, place of supply of OIDAR services shall be the location of the recipient of service. And they go one step further. Person receiving such services shall be deemed to be located in the taxable territory if two of the following non-contradictory conditions are satisfied. So what do they mean? Let us say you're doing a music download to the internet. Now, obviously, there's an address. You give an address, and that address is in India. Or you use a credit card, which has been issued by, let us say, HSG Bank. Or your billing address is Hyderabad. Or the IP address of the device that you are using is located in India. Or the bank account used for payment is in India. Or the country code of SIM card used by you is in India. Or the landline through which service is received, fixed landline, is in India. So either any two of these conditions, if you satisfy, then the person receiving the services shall be deemed to be located in the taxable territory. So it's very easy to fulfill any of these two conditions. Any two will get easily caught. Next. Next.
Yes, sir.
Yeah, go to the next slide. Now let's go back to the old definition of import of service. Import of service means supply of any service where supply of service is located outside India, recipient is located in India, place of supply is in India. These are all well known. Now when it comes to OIDR, what they say is, where any service is supplied by any person who is located in a non-taxable territory to any person other than a non-taxable online recipient, IGST is payable under RCM by any person located in the taxable territory other than non-taxable online recipient. Now, I'll just try to digress this and make it very simple. We have now understood what is the OIDAR service. And we are also aware that the OIDAR service is being provided by a foreign company. When the service of OIDAR is provided by a foreign company, and it is provided to a person other than a non-taxable online recipient, then that fellow will pay, that is the recipient, will pay IGST under reverse charge mechanism. So who is this non-taxable online recipient? Next. Government, local authority, government authority, individual, any person not registered and receiving OIDAR for any purpose other than commerce or industry or business. So, if you are an individual sitting in your house, downloading a music, downloading a song, or downloading a film, or downloading a cloud service, or downloading a news content, or downloading a digital content, or downloading something which is not relevant for your business, then it is a service provided by, it is service in the nature of OIDAR. If it is a foreign company, then you have this services provided to non-taxable online recipient, and the law mandates that the foreign company should pay GST on this. Now just imagine a situation where the OIDAR services are provided by a foreign company to an Indian company which is registered for GST. Then import of service will come into picture. The recipient will pay IGST under reverse charge mechanism. So when OIDAR services are provided by a foreign company to a recipient in India who does not fall in this list and has a GST registration, then RCM. Otherwise, it is forward charge, and that too on a foreign company. Next. When OIDAR is supplied by a person located in non-taxable territory and received by a non-taxable online recipient, supplier liable to pay IGST. So for the first time, we are trying to tax a foreign company through GST and say that the foreign company must obtain GST registration. And we also made rules to the effect that the foreign company has to obtain registration in Bangalore. It doesn't have to obtain registration depends on entire world, entire part of India. One identified spot, Bangalore. There are about 300 plus registrations. There are 300 persons who are already registered. Next. Next. Few examples to make it clear. Messrs. Just go back to it. Cacophony International, a partnership firm based in Chennai, buys music online from an Ireland company and converts them into karaoke and sells the same in India. Now, straight away, it is used for business. Cacophony is now using it for business. So, even though it is OIDAR services provided by a foreign Ireland company, it is received by, it doesn't fall in the list of non-taxable online recipients because that guy is in business, and therefore import of service and RCM should apply. Second example, Mr. Buff Bangalore purchases music through internet from an island company. Same situation, but he is an individual. If he is an individual buying music for himself, for his own use, then OIDAR is still the nature of service, but the person liable to pay is the island company and not Mr. Buff. White Sky Inc. USA, you can skip the third example. It's a slightly tricky one. Next. There is a decision for OIDAR in service tax law. The company was operating a website and allowed access and retrieval of data and information. You can view the photographs freely, but if you want to download images, it was paid. The Bombay High Court said, in the case of photo library, the copyright of the images become instead the main activity of making information available. Therefore, download of data, it is OIDAR services. So, assuming the same OIDAR services are provided by Photo Library UK Inc. or US Photo Library PTE Singapore, that means a foreign company. then it becomes an OIDAR services. If it is an OIDAR services, then you have to look at who is receiving the service. If the service being received by an individual for his own use, then Singapore company pays. If the service received by an Indian company for business use, for exploitation and business, then Indian company pays under RC. Next. Last two topics, last two slides. US company under an agreement provides technical services to its subsidiary in India. Billing, cost plus 6.5%. And on this amount, Indian company discharges IGST on reverse charge basis. They're very clear. I'm making a payment for technical services. I will pay reverse charge IGST. And the cost plus 6.5 is also as per TP, therefore income tax is also fine. Over and above this fee, costs and expenses incurred on travel insurance of the person they put in India is recovered by the US company on actual basis without any margin or markup. Now the question is whether reimbursement will attract IGST as import of services. In my view, no, provided you meet all the pure agency conditions. Next. While the parties are indeed related, and because they are related, we say that you will have to go through a particular mechanism. And because of that, you are saying the invoice value will be taken as the value for the purpose of GST. That does not mean that they can still implement, they cannot implement pure agency between them. Even though US company and Indian company would qualify as related parties, it should still be possible for pure agency concept to be implemented, whereby if all the conditions are satisfied, the reimbursement of the expenses may not be liable to tax. So it depends upon how you provide those pure agency conditions from the legislation. Because the legislation deals with valuation, and what the legislation says through rules is that if it is a pure agency, it does not even form part of value. Therefore, that is the exclusion that you need to look at. I think this could be my last slide. Just go to the next slide. Yes, that completes my presentation for the day. And it's been a very long presentation from morning and very highly technical. It's very rare for me not to be humorous and very serious, but the topic was like that, and it's very difficult to jump into some kind of humor in this kind of content-oriented topics because you lose the content. The whole idea was to disseminate as much knowledge as possible in place of supply of services, given the fact that people are, most of the professionals are, all of us are all addicted to work. And even though we may not agree, at least we may not officially agree, all of us are so tuned to work that we are actually bored to some extent by not working. And therefore, everybody loves this kind of an opportunity to listen to something interesting. And therefore, I thought I'll spend a long time on the technical aspects. I hope you enjoyed the presentations. If there are questions which have come, I'll look at those questions. If I can answer, I will answer those questions. Otherwise,
yes, sir. Yes, sir. Sir, there are questions, sir. You have to answer these.
So there's a link at the bottom, sir. Q&A.
Yeah, I saw that. Click that, yeah.
Okay. Yes, sir. Can you connect the participant, sir, who is asking the questions? Nilesh, sir.
Yeah, sure.
Can you connect the participants?
Yeah, I'll do that.
There is some problem from my side to connect them.
Okay.
Okay.
So I'll read out the question for the sake of the benefit of others.
Yes.
In case of a Hyderabad person who has traveled to Chennai and he booked from Chennai, booked a ticket from Chennai to Hyderabad, where is the place of supply? See, the question is, you are based in Hyderabad, you may even come to Chennai to provide some of these services. But do you have a fixed establishment in Chennai which would trigger a registration? Your mere coming to Chennai would not trigger fixed establishment. You are staying in a hotel and probably having conferencing discussion may not trigger fixed establishment. You are going to the client site, may have some colors, but still the client site is not being used by you to provide the services. The client site is made available by him for you to provide the services. Therefore, straightaway it does not become a fixed establishment. But if you have a set of people working in Chennai and they are housed in one particular branch, and those people always come to that site whenever you come to Chennai, then that branch has played some role in the transaction. That branch is a fixed establishment. You may have to look at it differently.
Sir, I think it's maybe basic question, but of course, because of some other somewhere I have heard about this, there was some confusion in this thing. See, basically, I am booking a ticket from Chennai to Hyderabad, so where the IGST was charged, and the place of supply, in case of that, it seems to be Chennai. So can I take an eligibility of input credit of the ticket?
You're talking about the ITC.
Yeah, yes, sir, yes, sir. Regarding the whatever the ITC available on the flight ticket, which is booked from Chennai to Hyderabad.
Where are you based?
I am based in Hyderabad.
Mm-hmm.
My fixed establishment in Hyderabad. Just I came to Chennai some purpose, and now I am booking a ticket from Chennai to Hyderabad, where the ITC was charged by the airlines.
An airline is charging what ITC?
Yeah, IGST, obviously, because I have given my registration number from Telangana, so they are charged IGST while booking the ticket.
Now let's look at it this way. You're asking actually a different kind of a question. One is, as far as the airline is concerned, they have identified you as the recipient of service, and they've identified your Hyderabad address based on your communication with them as your address. And therefore, they an invoice with IGST with Hyderabad details as the location of the recipient.
Yes.
The travel which you did from Chennai to Hyderabad by the airline, maybe the service provided by the airline, but the service has been provided to you, and it has been provided to you in your capacity as a recipient of service. If you start going by the underlying nature of the transaction of travel services, so what if the airline has built the Hyderabad office? The challenge would come only when you have a Chennai office and you have deliberately given the Hyderabad office address, in which case also it's difficult to question, because even the Hyderabad office can say, I'm using it in the course or furtherance of business. For my ITC eligibility, all I have to say is that the travel expenditure was incurred in the course or furtherance of business, or in your case, it is profession. Therefore, you have used it for your business or profession, and you have traveled from Chennai to Hyderabad. It doesn't matter at all. You can take credit.
Okay, sir. Thank you.
Sir, can connect to the next query, sir?
Yeah. But import of drugs for clinical trials or bio-studies would fall under 13(3)(a), or is it an export of service? Now, first of all, you have to give me a little more details on this transaction. There are two aspects when clinical trial happens. The clinical trial contract is signed between the HSG in India with a foreign company, assuming, and the foreign company says, you will have to do these services, and for doing these services, I will give you the drugs. You will have to do the testing, and you will have to maintain certain parameters. You have to give certain reports at various stages as to what happens in terms of these drugs. Clinical testing has happened. It will be done on a set of volunteers. Some of the volunteers could have different backgrounds, and there are also various parameters on clinical trials as to whether all kinds of genetic patterns are tested, and based on that, reports are given. So now, one of the conditions for export of service is that the place of supply must be outside India. Now, in your case, if it is a case of testing of the drugs, and the drugs have to be made available by the foreign company, then in a way, you can look at it as a performance-based criteria, where by a performance-based criteria, goods are made available, and without the goods being made available, you are not able to perform your services. In the absence of the drugs being sent, you cannot carry out these services. Of course, one can, if that is the case, then it's a performance test and place of supply is in India, and therefore it will not be an export of services. One other argument that can be taken to view it as an export is that it is not strictly a work done on the goods, but it is work done using the goods. Now, is there a difference between work done on the goods and work using the goods? Only courts will have to say. So, if I'm able to say that I'm using something to provide a service, and that is not the same as providing the service on that item, then I may probably go back to 13.2 and say it is an export of service. But this requires tremendous amount of research and debate, and we may have to do a full-fledged professional analysis on that. If Sai Life Science is an AR, I'll just skip it. Next. Next question. Yes, you're right. The example of intermediary is that 12A entry, which is also what I talked about. Next. Any other questions? What is the rate of tax to be charged by a developer to the landowner in case of JDA? I think that goes beyond my mandate, and I'm sure there are other topics arranged by CTC to cover this, so let me not enter into that territory. Suffice to say, I'll give my view. In the case of a JDA, it is many factors that go into play. There is a possibility that the whole thing could be a revenue share agreement, in which case nothing should be taxed. There's a possibility that one can take based on Vasanta Greens that nothing is taxable. Or there's a possibility that something is taxable based on the notification, or something is taxable based on interpretation. So we'll have to see so many other factors. In the case of a hotel located in Karnataka, it has charged IGST instead of CGST from your client located in Telangana for accommodation services in Karnataka. And my client goes ahead and claims ITC of the same. Is there any risk involved for my client? This is all well settled even in the earlier SENVAT credit days and service tax days. If something has been wrongly charged, the recipient cannot be pulled up. At best, the department can proceed against the supplier of service wrongly charged. Even assuming somebody has charged you GST of 24% instead of 18%, when the law says 18%. Once 24% is charged, you're entitled to take credit on it. There are enough decisions on this in the pre-GST law. Company X sells embedded software, and the software works only with the hardware provided by a company. Will this be called as goods or services? It again depends upon whether it is a very ordinary fuzzy logic kind of software, whereby the element of software is so minor that it is the essential character, that is, the hardware is the essential character and the principal supply. And the software becomes only an incidental supply. Or is it a case where the software is such a critical element in the hardware that the hardware and software both will have to be treated as separate taxes? Then we may have to examine that both are principal supplies. And if both are principal supplies, then composite supply definition cannot apply. And I would treat them separately, with separate consideration and separate tax. Client of mine is involved in renting of a warehouse. They have charged IGST for the warehouse located in Telangana for their tenant who has registered place of business in Bangalore. When asked to raise an invoice charging CGST, SGST, they say the tenant does not have registration in Telangana. Just wanted to know if taking registration as Telangana is the only option in this case. See, this is a warehouse. So if it's a warehouse, are you also not, you're operating in that warehouse? So you would probably identify that warehouse as a storage point for the purpose of businesses, etc. In which case you have a place of registration. So if your place of business is also there, then you are right in asking for Telangana, which is CGST, SGST. But if you don't have a registration and you say that warehouse is just a storage point, it is not a place of business, then from a warehouse perspective, he is providing rental services. Location of services is his address wherever he is. Now, your location is completely outside that particular state. You are located outside, and therefore your supplier would simply say, look, you don't have a place of business in here in my state, and therefore I have no choice but charging IGST. This is somewhat similar to the commercial rentals which we discussed for a professional chartered accountant. The same logic is there. But if you want CGST and SGST as credits, and if you take a registration, it's a simpler process. You may just take a small office in that warehouse itself for registration or somewhere nearby. And you can even look at how the goods are moving and whether you can convert to a business model where you can raise some invoices on your other offices. One of our clients has operated in the form of JV and a registered office in Hyderabad and books of accounts maintained in Hyderabad and doing, and doing the construction work all over the country, taking the GST, registration, respective states having fixed establishment. We are the auditors providing audit services here in Hyderabad and sign here only some books of accounts are here, which tax needs to be charged. Yes, as far as your audit service are concerned, you're quite clear that the signing off happens in Hyderabad. Your terms of engagement must be very important. What is the terms of engagement which you sign with your client? And what is the scope of service you're providing? So if your terms of engagement is very clear that your sign off happens in Hyderabad and books of accounts are made in Hyderabad and your audit actually happens of that, that could be your principal activity, and you can take a position that what you're currently adopting is correct. Marketing survey conducted by a Netherlands company and all work done and on an online mode. Very, very limited facts. We need to see whether it goes beyond the nature of marketing. But if the Netherlands company is simply providing a kind of a survey services and everything is done online, they are not really intermediary services. They are more of a business support services. In which case, if you're making payment, RCM will definitely apply as an import of service. But if the services are provided online as a data, where you are fitting into those included list of services of OIDAR, which I said, which is unlikely because consultancy provided through the online platform or advisory provided through the online platform or support services provided through online platform is not OIDAR. There is a very big difference between download of a software and consultancy provided through online platforms. Consultancy would still be a general service and therefore be an import of service. It will not be OIDAR. Similarly, marketing survey or support service will also not be OIDAR. It will be an exempt service. What is 12A of IGST 9/2017? See, there are the place of supply provisions are only to determine taxability. Taxability is still governed by, is still have to be tested from an exemption perspective. So something is taxable based on place of supply, and you're able to say, sir, there is an overriding IGST exemption notification. That will prevail. For example, if you take healthcare services, healthcare services is general service, supply of goods or services for consideration. Therefore, a hospital provides healthcare services. It is taxable. You go by the definition, it is taxable. If you go by the notification next stage, it is exempt. So if there is an exemption, it will prevail. In case of traveling from Chennai, ideally the airline company would have charged CGST since location of supplier for airline is Chennai and place of supply is Chennai. But he says he has given his Hyderabad billing address and therefore IGST has been charged, and he does not have a place of office in Chennai. I think that's his facts.
Sir, Nilesh sir, can you connect Sambamurthy sir?
Yeah, I'll do that.
Sir,
Yes.
can you hear sir Sambamurthy sir?
Yeah. Thank you, Maninder and Nilesh. And good morning to Vaidisharan sir. Sir, I am Sambamurthy, Chartered Accountant. Regularly, yes, I hear you in BCA meetings. Sir, I have a question, if you permit me, which is not related to this subject. I want to ask a small question. Sir, in this period of lockdown, the GST authorities are issuing show cause notices and passing assessment orders, CST assessment orders. Are they valid, sir?
You're talking about VAT assessment orders.
Yeah. They are issuing show cause notices and passing that none appeared and passing the assessment orders.
See,
and
this
it is not
going, what you're saying is right. Even I have come across some clients who have received some orders in Andhra Pradesh and Telangana, specifically Andhra Pradesh. And what is happening is that the orders are dated 7th April, 9th April, etc.
Yes,
and
sir.
The order is attached as an email,
yeah,
and sent to the available email ID.
Yes, sir.
And two things stand out. One, none of these orders are signed orders. They are only Word files, and they are not signed orders. So it's a well-established position that an order which is not signed is not but a piece of paper. That's what courts have said.
Okay.
Two, even assuming it is a signed order and it's a scanned order, during lockdown, when nobody can go for a hearing and nobody can attend the hearing and provide documents and provide answers to an assessment proceeding, it would be very illegal to issue a show cause notice or a hearing date, fixing a hearing date during lockdown and then saying none appeared. So I would say that you have two choices. One, you have to knock the doors of the High Court. That would be a huge challenge because High Court is not taking up matters unless it is a very big emergency. So they may not say that there's an emergent enough, but you can try that. And you have to do a video conferencing argument and try to get it quashed. Second, better option would be to escalate the issue to the highest authority in the state, whether it is the finance secretary or the chief secretary or the chief minister, and also probably to the prime minister, to state that when the entire country is in lockdown and people are at home trying to ensure that India battles this disease and comes out safely, you cannot have parallel assessment going on and orders being passed. And it is not as if the department is going to lose any time. Because there are the Supreme Court has already passed an order saying that whatever time limit available is protected. And even the state government can at any point of time issue a notification or issue an ordinance and say that if it is time barred, it is extended during the period of lockdown. So they are not going to lose out anything by passing such harsh orders at this point of time without opposition being heard. So either escalate it through the government and ensure that this is stopped, or you may have to approach the High Court for a writ to quash these orders. And again, it will be this writ option might be a little bit difficult because you need to pass the first threshold of an emergent hearing.
Thank you, sir. Thank you very much, sir. It was a wonderful session, and we are all very much enriched with knowledge. I always believe that a swimming pool has ends, but knowledge pool has no limits. And when we hear always, we have no limits, and the appetite always increases to hear more and more. And 2 hours, how they passed, we are not knowing. It is just 10:30, but we are still feeling we have heard only for 2 or 5 minutes. It is the knowledge level of you and the interest level of our audience. In this connection, I request all the audience to give applause and to represent our heartful vote of thanks to you, sir. Thank you very much for providing us an opportunity to hear you. And we are all indebted to you, and we request you to continue such sessions in future also. We thank you very much, sir. Thank you, sir.
Thank you so much.
Thank you, sir.
Thank you, sir. Thank you so much, sir.
Thank you.
Thank you, all the participants. Thank you, sir.
Thank you, Maninder. Nice meeting all of you.
Thank you. Thank you.